move on from one corporate to another, and we have Mr. Anuj Kumar, who's Managing Director of CAMS, standing by to talk about the strong show that the company has delivered. Stock price is clearly reflecting that positivity. Thank you so much for taking time out, and festive greetings to you. I wanted to just get in a sense first up as to what the outlook is when it comes to your margin outlook. Is the operating leverage kicking in, and can you walk us through what really has aided your overall quarterly performance?
Yeah, sure. Good morning, and thanks for having me on the show. And very happy Diwali to you and to your entire viewership. The last quarter, second quarter of FY25 is perhaps the strongest quarter we've had in recent history. And I think it worked because our core mutual funds business and our entire non-MF business saw a strong revenue spurt in excess of 30%. If I talk about mutual funds, I think the franchise expanded significantly. We saw our mutual fund assets touch 45 lakh crore with an increment of about 5 lakh crore within a quarter, which is a strong number, and we've not experienced that before. From an investor participation perspective, the digitization and retailization continue to deepen. We recorded over 1.2 crore SIPs, new SIPs registered within the quarter. Just to put this in context, this used to be our annual number about 3 years back. So in about 3.5 years, this number is 4x. Equity net sales, which is again a strong foundational metric representing investor participation, was almost 1 lakh crore, grew in excess of 50%. Equity market share, equity AUM market share crept up to about 66%. So in combination, I think the strong retailization, strong markets led to strong asset growth, and that led to MF revenue growing by over 32%. I think the other part is that our non-MF franchises kicked in very nicely. We built this product suite out about 5 to 6 different offerings over the last 4 to 5 years. Just to give you a glimpse, our payments business grew in excess of 60%. This is on top of our 26% annual growth last year. Our KRA business grew in excess of 50%. We continue to hold over 50% share in our alternatives business, which grew over 20%. So in aggregate, I think it was a very strong quarter, led by the core MF business and the non-MF businesses, all kind of firing on all cylinders.
It was a very strong quarter, and hi, this is Anisha joining in extending the greetings as well. But the question is, what about the way forward with the kind of correction which has come in? And time and again, every expert has been telling us that we need to moderate expectations for the next year in terms of growth. Do you think that would lead to a bit of pausing of SIPs or reduction in the kind of growth rate that we were seeing in new account openings and the flows coming in?
So I think the investor behavior has matured quite a bit over the last 3 or 4 years. And if I go back to short-term market blips, we haven't seen any knee-jerk reactions from customers. So we don't think if it is a short-term correction that a large part of customer behavior will change. In aggregate, we believe that for the full year, while we don't give forward-looking guidances, it's my expectation that because the base is built over the last 2 quarters, the first half is over, we should be able to record revenue growth in at least the high 20s. We've reported in the 30s for the last 2 quarters, and profit growth at least in the early 30s. That's the outlook for this complete year. Next year, which is FY26, we will be operating off a much larger base, as you know. So obviously, we would also guide that our earnings and profit growth will be more moderate, and it'll be reasonable to think of it as in the mid to high teens than in the 20s.
You see the non-MF business as well growing. There's been a 7% sequential growth this time around. What will be the key growth drivers here?
The key growth driver, as I said, is typically retail participation. So as retail customers come in, they have to be onboarded and KYC'd. That gives a kicker to the KRA business. Their recurring payments, whether in SIPs or if I take the other part of the franchise, which is the insurance, if they have to be set up, then CAMS pay gains. So I think for us, the fundamental metric is as new investors continue to come in, and as assets scale, those are the 2 things to look at. They will be the prime drivers for both revenue and profit growth.
the growth driver, but you've also been forming these JVs, whether it was with KFIN, etc., or not. Anything more in the pipeline, and how is that expected to, provide a fillip to growth?
So, MF Central is essentially a platform which came out of a regulatory guidance to create investor convenience. So, the primary objective is to create a single platform where investors can transact all kind of transactions digitally without resorting to paper. So, that's a great transformation which is happening in the industry. As you know, compared to cohort industries, we are upwards of 90% in sourcing digital and electronic transactions. Today, MF Central, we've announced the JV. The JV will be kind of consummated in the next 30 to 45 days. It will give it ability to kind of popularize APIs, broaden out financial transactions, empower more partner entities to deal with it. And therefore, it will kind of make its presence felt and scale a lot more. But like I said, the primary objective of that is to create investor convenience, and revenue and profit will remain objectives, but are not the primary objectives.
Non-MF part of the business, could you talk to us about what's going to be the growth rate there going forward? And for instance, is Bima Central, of yours, of course, it's coming off a low base, but how's that expected to, grow from here on?
So Bima Central is a very nice piece of innovation which allows an investor who holds an electronic insurance account. So the requirement is that you should have an EIA, which now close to 3 crore people in the country have. But if you have that, then you can do digital transactions through Bima Central, which means you can renew, you can pay your premiums, you can file for a claim, you can do all that kind of stuff. We have 2 integrated insurers, SBI General and ICICI Pru, and many others are coming in. So it is the first taste of entirely digital transaction execution and engagement with investors for all the insurance holdings. So we are expecting, and as you said, it's a very small base, but we mentioned the 1 lakh transactions because anything momentous in life starts off a small base. It's a small base, but it will grow. And I think it offers unprecedented investor convenience. So we're expecting that to scale quite a bit. On the MF side, historically, assets have grown about 17-18%. The last 6 months, they've grown almost 40%. So I think at some time you will see a moderation of the 40%. The 40% in excess of 18% has driven quite a few of the financial metrics. We believe that for the rest of the year, it is fair to expect assets to grow in the 20s, mid to late 20s, than in the late 30s.
Good to know. Thank you so much for sharing with us your growth guidance as well as what is going to be the contributors down the line. That's the word from the management of CAMS. A quick check.
If you like this video, then like, share and subscribe to ET Now.